Every month in the stock market has its own personality on average. Some bring steady gains, others bring volatility. But one month consistently stands apart: September. If you've heard of the September effect, you already know the reputation. It's the only month in the US market history that, on average, is negative. That fact alone makes it unique. Looking back over a century, almost every month shows a positive average return for the S&P 500, except September. It averages a decline of about 0.8%. And here's a twist. While September sits at the bottom, July sits at the top. July has been one of the strongest months historically, with an average gain of about 1.9%. So, in terms of seasonality, we often come off a strong summer stretch into the weakest on average. July and August of 2025 this year gave us a strong performance, setting multiple new all-time highs throughout the months. What makes September unusual isn't just the size of that average decline, it's also how often it happens. About half of all Septembers finish in the red. That's compared to a typical month, which is positive nearly 2/3 of the time. So, yes, September really does stand out for both frequency and severity. But averages hide a lot. If we take a different route and focus only on the outliers, we see something important. Since the 1920s, there have been about 10 Septembers with very large, outsized declines. These are the ones tied to major crises, financial shocks, recessions, or periods of extreme volatility. Think the Great Depression of the 1930s, the dot-com bubble bursting in the early 2000s, and the Great Financial Crisis of 2008. And they have outsized effect on the statistics. Without those 10 extremes, September, on average, looks much different. In fact, the average is positive, much like other months of the year. So the story of September isn't about steady, seasonal, built-in weakness. It's about a handful of big events that happen to cluster in September. Fast forward to today, we don't see the same kind of cracks in the system that preceded those historically bad Septembers. That doesn't mean surprises aren't impossible. Investors rarely see them coming. But it does mean the current environment to us looks very different from those stress points in history. And it's worth noting where we came from. This summer has been strong. The S&P 500 hit multiple all-time highs with a rally that started back in April. That kind of run-up often sets the stage for some cooling off. Something we do at Vector is portfolio rebalancing. After strong gains, rebalancing is a way of trimming back what has run ahead of expectations. It keeps the risk of concentration in check, and it turns volatility from something you fear into something you can use. So is September cursed? The data says it's the weakest month, the only month with a negative average. But that weakness is heavily driven by about 10 major outlier declines in the past century. Without them, September looks more like the rest of the year. Does that mean without a black swan event that we'll have a strong finish to this year? Well, we can't say. But what we can say is this: markets will always have their quirks, and history will always offer reminders that volatility is part of the journey. But when you step back, what stands out isn't the bumps, it's the powerful trend of long-term growth. That's why we put so much emphasis on planning, diversification, and disciplined rebalancing. Those are the tools that turn uncertainty into confidence. And that's the steady ground that investors can stand on through Septembers, through Octobers, and well beyond.
Hey, thanks for listening to our podcast. Information presented is for educational purposes only and does not intend to make an offer or solicitation for the sale or purchase of any specific securities, investments, or investment